Hello and welcome everybody to our first QPLIX webinar. Today we will present on how to better understand your alternative investments. Here with me today are my colleagues Yannick and Fabian. My name is Sebastian Deck. I head QPLIX marketing department. Let me just say a few words on the webinar and the proceedings. So we start with a little quiz, just so that we learn a little bit more about the attendees, about how far you are on your journey towards a digital wealth management platform. Then my colleagues will take over with a presentation. Due to data protection rules, we will not show your full names, so everything is totally safe and compliant here. Should you have questions during the webinar, for data protection reasons and in order not to disturb the flow of the presentations, we will not have you live. So please just send your questions in the public chat. We will collect all your questions, and at the end of the webinar, we will have a little Q&A session. After the webinar, of course, we will send you a link with a recording of the webinar. And it would be super nice if you would like to see more of us, if you would subscribe to our newsletter. And there we will inform you regularly about the new topics, our new agendas, and all the webinars that we have planned. So thank you very much. And before I hand over to my colleagues for the presentation, as already said, I would start with a little quiz. So what we would like to know from you is, do you already use a unified single platform for wealth management or portfolio management? Yes or no? Okay. An impressive figure, but obviously not yet representative. So please, everybody, the more of you join, the more relevant the answers will be. Still, I think we can say a slight majority still does not yet use a unified wealth management platform, which is not necessarily a bad start for this presentation. So everybody who would still like to participate, and here are the results. So, which is even nicer for us? So some of you think of implementing one. This is a nice result to hand over to the presenters. Yannick and Fabian, please, the stage is yours.
Yes, thank you very much, Sebastian. I will just quickly share my screen with you. So, welcome all to our first webinar. I'm actually very happy to have you all on board here today. And yeah, before we start, let's maybe give the webinar a bit of a structure. We can quickly go through our agenda, where we basically first start with the PwC Asset and Wealth Management Revolution report. We're going to take a look at the key findings of the report, and one will actually be diversification, that I can say now already. And that's going to be our second point, so diversification as a major industry trend. And then last but not least, we're actually going to grab the topic of today's webinar and really show you three real client use cases, how we actually help clients over various different alternative asset classes with QPLIX, or in the end with technology. And therefore, I'm going to partner with Fabian, who will actually show you that and guide you through the system. But let's maybe first talk about the report. What does it actually tell us? So basically, it really highlights that inflation, that market volatility, and also rising interest rates are actually the biggest concerns of today's wealth and asset managers. And therefore, actually 16% of existing asset and wealth management companies will have been merged or disappeared by 2027, which is actually a quite significant number. That's twice the historical rate of turnover. And how do asset and wealth managers react to this new market situation based on the report? So there are actually two main trends. The first one is that it's obviously harder to outperform markets. It's harder to outperform even low-risk instruments due to the rising interest rates. And therefore, actually, asset and wealth managers are moving more towards passive investments. So just for a more low-cost portfolio, for a more liquid and more transparent portfolio. And the second trend is that there's also a continuing trend, actually, as we could see it over the last years, more into private markets. And this has mainly two reasons. On the one hand side, asset and wealth managers want to achieve, actually a hedge against market volatility, one of the previous previous trends. And secondly, of course, they also want to achieve higher returns, basically, with their shift towards private markets. But what do all these trends and this new market situation basically imply? And basically, the report really points out that asset and wealth managers are going in new segments, in new geographies, and new asset classes, and that actually leads to a higher complexity and also to higher operational demands. And the report really states out that it's key for asset and wealth managers to manage these complexities and these increased reporting demands. And maybe just to give you a number here, actually $68 trillion of wealth will be transferred from baby boomers to millennials by 2030. Which is, I think, quite a significant number. And that's actually also key that you understand the new client requirements. And as I said, that's actually the topic of today's webinar. We actually want to show you how technology, and in specific QPLIX, can help asset and wealth managers to address these new requirements in terms of new segments, in terms of more diversified portfolios. And therefore, we also have prepared basically two diagrams which really show you these trends. They're both from the PwC report. And basically what you see here in specific is the continuous rise of private market investments in the wealth management field. That's what you see here marked in red. And you also see basically down here marked in orange the rise in passive investments. So actually both industry trends which we've just talked about. And then secondly, we also have like one diagram which describes the geographical diversification quite well, because right here you actually see the year-on-year growth for different markets. And basically what you see that in emerging markets as Latin America or also the Middle East, you had like very high growth rates actually in 2022, obviously leading also to a higher share in the portfolios of asset and wealth managers nowadays. But before we now take a look at the three specific use cases, we also want to tell you a bit more about QPLIX, where we come from, to get the picture a little bit more clear. So basically, we started as a back-end solution. Firstly, of course, we provided our clients to manage complex ownership structures, basically to analyze every asset class as it is, so liquid and illiquid investments. And besides the accounting, of course, also having like a reporting solution with PDF reports, but also a mobile reporting with our client app, for example, our client portal. But then from time to time, we also realized that we basically want to cover the whole value chain in the asset management field, and we also kind of moved in the mid and front office part, and therefore basically in the meantime we also have an integrated ordering module, a portfolio construction module, and various controlling modules where you can also kind of track your portfolios based on specific investment guidelines or target allocations you might have in your daily doing. But when we come back to the alternatives part, how can technology actually help to understand these better? Therefore, we've just taken out 4 examples. On the one hand side, it is really important that you understand all of the transaction types for every asset class. Beside, of course, you need the right metrics, you need the right KPIs to report these asset classes. That's what we're also going to see later on in the use cases. And of course, based on the transaction types, you also need the correct accounting to create kind of the correct financial statements then for your clients. And last but not least, since especially on the alternative fields, the investments are usually quite high, of course, also a central document management is key. And that's what you can basically store then in a software as QPLIX, either on asset level, on entity level, or transaction level. And now understanding maybe the whole market situation which we're in now, also understanding our background, how we can help here. We've now created 3 use cases, actually, 3 real client use cases we had over the last time. And that's what we're going to present you now together with Fabian. And let us maybe just dive in the first use case which we've prepared. And this client is actually an international multifamily office and has a very high exposure in private equity investment. It's basically consolidating all of their private equity investments with a investment vehicle. And since there are just like so many funds invested, actually the multifamily office approached us because they really had difficulties in tracking their unfunded commitments and tracking their outstanding liquidity to basically do capital calls in the future. And they also found it hard basically to future their future cash flows, so distributions and capital calls for existing funds. And how we actually help this specific multifamily office with QPLIX, Fabian, I'm going to show you now.
Thank you. So I will try to give you a little bit of a perspective of how we implemented this for our clients. And of course, it'll be a little bit high level, but if you would like to dive a little bit more in depth later, of course, you're welcome to get in touch. So specific case that we're talking about here, we've got a multifamily office that really had a very diversified approach. You can see here, basically we have liquid assets as well as illiquid assets. So one of the points was to integrate basically both of the different asset classes into one system. Previously, they had this in Excel and in a software. So this was the main driver to get everything into one system, to be able to evaluate everything together and do analytics on your strategic asset allocation, etc. I will go on the details now of private equity, because private equity was for them one of the main selling points, and they were actually recommending funds to their clients, having their own pass-through vehicle in order to make investing easy. So they wanted to, of course, add some value there for their clients with our new software. And as you can see here in QPLIX, you have a specific asset class that actually analyzes private equity funds as they appear in real life, I always like to say. So we have our typical multiples here that we can analyze. We have some master data about the fund, what has happened there in the current year. And I guess one of the main advantages of QPLIX is that we place a J-curve in the system for each private equity fund. And this we can see here on the right, and the J-curve basically forecasts our cash flows into the future. At least it gives you some idea of what will happen in the future, and it also helps us to accordingly plan our cash flow into the future. I will show you now. This then leads into a cash flow forecast. So basically, if you've set up the private equity funds correctly in the QPLIX system, this will automatically come out of it at the other side. We've got here a typical view of quarterly cash flows, in, out, and the total flow. And we can actually dig in and see per asset class and write down to the single fund what are our expected flows. And since these flows are actually transactions in the QPLIX system, they also end up a bank account, and we can easily analyze also. I cannot show you this right now, but we can actually also analyze the bank balances accordingly, how they are progressing over the years, and we can see if we have sufficient cash flow or not. In this case, of course, it might lead to liquidating some liquid assets in order to meet those cash flow demands. All right, and we go to the next use case. Yannick?
Yes, thanks, Fabian. So the next use case is actually a single family office this time. And this single family office is investing a lot in real estate investments. Basically, they're covering the full life cycle. So on the one hand side, kind of development projects. On the other hand side, they're also doing the active asset management in the end. And since the asset class real estate is, of course, an asset class which is linked to loans, to debt quite a lot. They actually had the pain points that they wanted to see the return on equity and the return on debt actually separately. And basically, therefore, we integrated kind of a linking between their loans and between their real estate investments. Fabian is going to show you that later on. And furthermore, what they also wanted to have is kind of a central property management in the software, where they can actually track each real estate, the incoming cash flows, and so on, and have kind of a full transparency above all different investment projects. And therefore, I might just give the microphone back to Fabian.
Great, thank you. I guess real estate is probably one of the most common asset classes. Almost every one of our systems has real estate as part of it. I guess in the end, it depends a little bit how much in detail our clients then look at real estate. This client focused on real estate, so the details were more important than maybe to some other clients. However, really, real estate is so simple to implement in the system that most clients are actually using the same type of functionalities. So here we can see a details page on a single real estate investment. Of course, you can see the picture straight away. I think with real estate investors, it's always quite important also to see what they have invested in. It's a real asset that you can go and visit, and maybe you can also include some floor plans, etc. So it's very popular to enrich the system there with a little bit of data from that side. We also have a document system in QPLIX, so we can actually also hold purchase contracts, etc., rental agreements, etc., of your key clients. So in the end, it's a one-stop shop where you can view what is happening all around your real estate. To talk about the topic that Yannick touched on, that we want to see our return on the real estate object itself, but also including any debt financing. We have a simple structure there in QPLIX that we call linking. In this case, we can link two different types or several investments with each other and display them in a single line in a table. So what comes out of it in the end is a simple table here where we can actually visualize basically what was my purchase price of the entire real estate, what's my equity financing, my debt financing, and we are able to calculate an IRR and money-weighted return either on equity with leverage effect, of course, included, or on the object itself. And we don't really need to do anything special. It's readily available in the system. Okay, and we move on to the last use case.
Exactly. So we've got two now. On the first hand side, the private equity case where we had these like liquidity pain points. The second case now, the real estate case where we had this like difficulties in tracking kind of your outstanding debts and the real performance actually on an object. And the third case now is a investment office client focused really on direct investments, which is also kind of our third asset class we're going to highlight today. And basically, that investment office is investing a lot with other co-investors over various financing rounds. So obviously, actually, one pain point really was to track the performance of each financing round. And secondly, of course, the investment office also wanted to have kind of a overview of the different shareholders of their companies. And as a third point, a pain point, which we just like taken out of this example, is that they also wanted to see kind of the key figures basically on company level. So how did it perform? Maybe even how many employees does a specific current company employ. So that actually this investment office wanted to understand, and how we can help to give transparency here. That's again Fabian's turn.
Great, thank you. So I guess direct holdings is very diverse in our system, how it is handled. I have many clients, they say, well, we are placing our minority investments in these companies, and then it's basically good luck. I don't know really what's happening with the company. I'm such a small shareholder, I don't have any way to influence my investment. Now, in this case, actually, that we're presenting here, this investment office is actually placing sort of VC type investments where they have a significant share in the investment and where they are actually in touch with their investments. So in this case, we can actually visualize a little bit more than just a one-off investment and then nothing happens anymore. In this case, they're actually doing co-investments with other companies as well they would like to track. And as you can see here on a details page of one of our direct holdings, we can track each investment round here separately. So first of all, we create an investment round in QPLIX. We can say who are my co-investors, etc. And then I place an investment in this investment round, which then afterwards allows me also to track when, how much, and what's the performance of each round. Other than that, typically on these type of investments, we don't have much activity on a pure investor side. Typically no dividends. Well, we see some dividends here. I would say that's probably very non-typical. So many of those clients that are in touch with their investments, like it is in this case, they will then ask their investments for some additional data. And QPLIX has a functionality for visualizing this data. So what we do is we can import data with an Excel importer. So we create basically a template, an import template, where we can track certain data. This might vary depending on the sector that you're active in, or so in this case they chose just simple financial data, revenue and EBIT. But this may be cash burn and the current cash position. This may be the number of employees over the years. And then we can track basically budget numbers, actual numbers, forecast numbers, and so on, and track them over the years. And this way we can have still a feeling for whether this investment is actually going well. This one appears to grow quite steadily. Looks like it's going the right direction. But we could, of course, also compare one investment with the other and compare these figures with each other. So we have here an opportunity without actually any financial transaction, any investment transactions happening to see how our investment is performing. Okay.
All right, maybe to find a summary here, we've talked about the industry trends. So diversification basically as one key driver right now for asset and wealth managers. And I really hope that we could give you a little bit of an introduction of how we actually help our clients. And of course, this use case is actually transferable to a lot of different customer segments. So in this case, it was an investment office and a family office. Of course, it could also be a lot of other different client groups, which have kind of the similar pain points. And we hoped actually that we could help you today to get a bit more of an understanding how technology, how QPLIX can actually help here to get a better insight in your alternative portfolios. And maybe we can just take a look now at this number, 30%. Why does it actually stand there? It's one feedback we got from one client. They could actually reduce their workload by 30% through the implementation of QPLIX, and they basically benefit not just through the implementation of a holistic reporting basically on alternatives, also on a lot of different other topics. And if you, of course, want to understand how we could help this client, or if you maybe even want to understand a little bit more how we treat alternative classes in asset classes in QPLIX, feel free to contact me afterwards after this webinar. And I hope you liked it. And of course, we would be happy to also welcome you in our next webinar sessions.
So thank you very much, Yannick and Fabian. We have received not so many questions. Anyways, let's see what we got. So we have one question here on how and where is confidential data kept behind QPLIX, and who owns actually this data? Yannick, Fabian, what's your say on that?
I think this type of question we would better answer in an individual discussion, but maybe we can get in touch, or the person that asked the question can get in touch directly, and of course we can discuss this.
Which is a very good point. So you might have seen to your right-hand side, you have this little button where you can book a personal demo. So everything which goes too far into the details, I think makes more sense to discuss personally. This is why we have this interaction opportunity here. So please feel free, just click on the button and we will later get in touch with you and organize a personal demo where you can address detailed questions. So let's check. What else do we have in the chat?
We had a question about private equity performance, right? So
private equity performance, right. So evaluating private equity performance is a crucial step when considering investing. Private equity funds are typically assessed on various metrics, including internal rate of return. So what is the actual question here?
I can address this question if you like. Yeah.
Please go ahead.
So in QPLIX is transaction based. So basically each transaction that happens on, in this case, a private equity fund, will be entered in QPLIX as it happens, on exactly the date it happens, when it was paid, etc. The different transaction types are available in QPLIX, so you can enter a capital call, distributions, recallable distributions, etc., return of capital. You can configure if you would like to have management fees entered separately, or if you would like them to go into your private equity statistics. Any changes in the market value are also transactions that are entered on a specific date, so typically when it is reported by the fund. And based on all of these transactions, we then evaluate performance. So an IRR is a readily available metric in QPLIX, which can be calculated on a single fund level. We basically consider all the cash flows that happen according to the transactions that were entered. And then we consider a final cash flow, the current market value, or the market value as of the evaluation date as a final cash flow. And based on this, the system calculates an IRR. Similarly, we calculate DPI, RVPI, TVPI, basically on the category of transaction, whether it's a capital call, distribution, etc. At the same time, any other metric would work for a private equity fund as well. So even if a time-weighted return was to be calculated on the entire portfolio, including liquid and illiquid investment, that's of course also possible. We can have absolute return metrics, etc. I think QPLIX offers some 300, 400 metrics by now that can be evaluated on the portfolio. I hope that answers the question on private equity performance.
Thank you very much, Fabian. So should you have further questions, please just use the chat. There is another question coming in. 1 second. This one from Thomas. Many thanks. Good presentation. Yes, I fully agree. Does QPLIX have a dedicated function to grab cash flow notices from the FOF GP's portraits via AIP and implement the cash flow automatically in the system? AIP, this is probably meant to be API.
API, yeah. I mean, to be honest, we are starting in this direction. QPLIX has the functionality to import, I think for all of our illiquid asset classes, actually the transactions via an interface. We use a JSON format for this type of import. That JSON could be submitted via API or via an SFTP, etc. So our own QJSON format that we use there. And we have got experience with, I believe, 1 or 2 banks to actually, when the private equity funds, for example, are in custody with a bank, that we can get those transactions automatically into the system. Currently, it's still difficult to get these flows from many banks. From GPs portals, we are also getting our first experience currently that we actually are trying to implement like a machine read function of the capital notices and so on. But for which cases we can and cannot do, I think we should have a more detailed discussion then about your use case. And then we can evaluate how much we are actually able to automate there for you.
So there is one last question coming in from Christine. I assume monitoring the SAA is also possible across every asset class. Yannick, Fabian.
I guess I can also take that. Yes, of course, strategic asset allocation is available. We call it the element in QPLIX is a target allocation, where you can basically implement a strategic asset allocation, not only along asset classes, but you could also have a strategic asset allocation for currencies, for geographies, basically for any dimension that might be available in the system or that you might create yourself. And of course, this includes all the asset classes, all the different security types that can flow into that. I think particularly interesting in the private equity sector is that we can do this type of strategic asset allocation evaluation, also including open commitments. Because of course, if we do the strategic asset allocation based on current market value, you run a risk of over allocating to private equity because the commitments will only be called over the years. So that might give you the wrong picture. So we actually have both types of views on a strategic asset allocation available.
Thank you very much, Fabian. So let me once again please use the opportunity to promote our button to the right-hand side. So should you feel you would like to learn more about the platform, please just book your personal demo here. From a marketing side, please just let me promote once again our newsletter. So should you feel that this was very content-rich, short and crispy presentation, please feel free to register and we will keep you updated on the upcoming webinars. I would like to do one last thing. You might remember our quiz, which we had in the beginning. And I think it would be quite interesting to see that maybe your assessment has changed in the past 30 minutes. So please just allow me to ask you the same question again. And get back to our quiz on platform usage. Let's see if you've changed your opinions, if my colleagues have been able to convince you that maybe you should dig a little deeper into this topic. So one of you is thinking about implementing one in the next 12 months too. This is pretty much what we had in the beginning. And there is a third one. This is nice. So this is definitely a direct reaction to your great presentation. Yannick and Fabian, 5. Excellent. 6, more and more. Excellent. So this is exactly what we wanted to see. It seems that you have raised quite a lot of interest in this topic. Thanks. Thank you very much. Thank you for attending. Thanks to Yannick and Fabian for the great presentation. And before we say goodbye and wait for you for the next webinar, please just once again let me give you the opportunity to set up your personal demo with our colleagues, which you can do by just clicking one last time on our button. Thank you very much for your interest. This was our first, most definitely not our last webinar. Thank you very much and see you soon.
Thank you very much.
Bye.
See you. Goodbye.
Thank you.